I am here with one of my favorite, I don't even know what I call you at this point, Bitcoin wizard, macro analyst. I don't know, he's made the craziest, seemingly most outlandish predictions, and every time we update with each other, they're pretty much all right. I'm here with CJ Constantinos, of course, a People's Reserve. So CJ, I teed you up, man. If you guys haven't seen the older CJ, Opti, Simply Bitcoin interviews, I highly recommend you go check those ones out. Maybe before this, because we're just going to dive straight into it. CJ, where are we right now in the markets? We're seeing a lot of turmoil. I know we're at the Bitcoin conference, so maybe we can talk about the themes of this show, but I really want to hit on where the markets are right now, because we did see a lot of trouble the last couple of weeks with tariffs, the Japanese bond markets, you know, the inflation's going up, gold is rising, all-time highs, Bitcoin's pumping. What is going on right now, CJ?
Oh, thank you for that intro. I appreciate that. I always love being with you, Opti, myself. You're one of my favorites as well. And I'll tell you what, it's unbelievable where we are right now. Everything that we were concerned about, everything that we warned about is literally happening right now. So people, you guys really need to, if you haven't already, step it up and start stacking it the hardest you've ever stacked before. Bitcoin's crashing right now, right?
Yeah, what 106 is over.
It's crashed, it's over, zero's next. No. Guys, what's happening is the financial system is pulling apart at the seams. Japan is losing control. There's probably some type of stealth yield curve control going on, not only in Japan, but here in the United States of America as well. The US 10-year Treasury is inching up towards 5%. I've been wrong about that rate going above 5% since 2022. But what I haven't been wrong about is if we breach that 5% rate, everything will unravel. Literally, Bank Term Funding Program number 2 will kick into gear. Everything will fall apart. The banks will have to print. There will be a Bank Term Funding Program. They will print like they've never printed before. Of course, that's quantitative tightening, right? That's less money in the system.
Yeah.
The more they print, the less money there is. The opposite of what is happening. We are now seeing fake news into fake finance news. Everything is like great for the economy. I've seen some people on Twitter, everything is so good, everything is so strong, the GDP numbers look so great. Yeah, well, when you pretend that CPI is like 1%, then yeah, everything is fantastic. But when you look at the reality, everybody out there knows when you're stacking your sats and you're saving, oh man, why can I save less this month than I did the previous month? Because the prices are going up higher, harder, and faster. And there's no way to pinpoint the exact CPI. There isn't, because your lifestyle is different than mine, different than the next person. But what we know for sure, because we're paying the bills, are those prices are going up. And the only way to escape that as we move into escape velocity is to get into Bitcoin. And what we see now is like this double top, I call it like a post-traumatic stress disorder, right? We went to 60,000, 64,000, we came back down, we went to 69,000, and then we went into a bear market. So everybody's like, oh, we went up to like 110, we came back down to 74, now we're back up to 111, we got a slightly higher high. It's over, guys, wrap it up, raise your dollars, right? Raise your dollars, get ready to buy the dip. We just got out of the dip. We just dipped down to $74,000. Where the hell were you back then? You should be it's time to go all in.
Yeah.
And why do we know that? Not because of Bitcoin's performance, not because we're having fun here at the conference, because traditional finance is breaking down. The interest rates are going up. The Federal Reserve is coming out. They're trying to convince you. You see all these news articles. We're going to lower interest rates. We're going to lower interest rates. We're going to lower interest rates because of this reason and that reason. And this person requests this person to lower interest rates. And the narrative is about how interest rates are going to go down. We're just trying to figure out the perfect time. We want to come in for that soft landing. Well, I'll tell you what. It ain't looking like this right now. It's looking like this right now. We're at the wrong angle. And this shit is going to blow up. And when it does, if you're not in Bitcoin, it's going to be too late. It's going to be, that's the scary part, guys. Right now, you can click a few buttons and buy some sats, but for those of you who were around during COVID, remember the COVID crash? People could not
Terrifying.
log in. You could not even log in to buy.
Log in. Coinbase is done. All the exchanges were over. It literally felt like the end of the world.
That is what it's going to be like. When it becomes evident that what we've been saying and predicting is actually becoming a reality, that the United States government is losing control of their yield curve, the most important yield curve in the world, there will not be time to log in. And the big players right now, the Cantors, the bankers, the Bitcoin treasury companies, why the hell do you think they're doing this? Why in the world do you think that they're doing these things? Because they see the writing on the wall. Why is Jamie Dimon selling his stock? I wonder why he's selling his stock. Because he knows where it's going. Not because it's a good time to take profits. No, he would do what Elon did with his Tesla shares and just borrow against them if he needed to spend any of that money. He is divesting because he sees the system pulling apart at the seams. He sees the bifurcation in our political system, one pulling for communist socialism, slavery, and the other pulling for some type of freedom that isn't Bitcoin freedom, but is a fake freedom, I would call it.
Bitcoin wrapper or something,
I don't know
it's
what
like
it is.
kind of Bitcoin, but it's some big monstrosity that, like, who knows what it is.
Oh my gosh. So Nico and I, we were on stage with G Money the other day. He said it perfectly. Buy your Bitcoin, self-custody your Bitcoin, opt out of the system. You want to know something funny? I could be with my family right now somewhere just relaxing, private island. But you know what? I overdrafted on my bank account the other day. I literally overdrafted on my bank account today. You should own the least amount of dollars possible at this point in time. You should be pulling out, typically I tell people, yeah, maybe you take out a quarter, don't stress yourself. I mean, I'm month to month at this point. I do not trust these people at all. Nobody knows what the linchpin is, but just like with this grenade, you pull that linchpin, you sit there, we're just waiting for this thing to explode. That's where we're at this point. The pin has been pulled, and they're losing control of the narrative. They're losing control, most importantly, of the interest rates, and I'm really concerned. I'm concerned. Now, does that mean the banks are going to crash and everything's going to change? Absolutely not. Because you know why? Like they always do, they're just going to print the money. So the status quo is going to remain. You won't know if you're not listening to Simply Bitcoin and you're not following the news, you will not know that it's actually happening because they're just going to print over it. But over time, what happens is that $60 steak dinner is now a $90 steak dinner. I took my family to Outback Steakhouse the other night. I got 3 kids and my wife and me. It was $200, and we don't drink alcohol. We don't drink at dinner. We just got, and the kids shared a kid's meal. It was $200. Unbelievable. And maybe like 5-6 years ago we would go, $80. $80. We're seeing over 100%, depending on how you live your life and what you buy, we're seeing over 100% since 2020. Over 100%. That's 5 years. So that's 20% per year. What is this 2%? It is a lie, and you guys need to wake up to the lie, and thank God you're tuning in because you probably know something's going on. You can feel it in your gut. They're not going to tell you it on TV. Stack sacks, get ready, get prepared. They are losing control, and that's why we see this big corporate push to get into Bitcoin. It is a massed push they are emergency exiting. They're like exiting. The pilot is like, everything's good, guys, and he's putting on his parachute. He's putting on his parachute. They're getting ready. Everything's good. Everybody stay calm. Seatbelts are on. Stay fastened. No using the bathrooms.
Buckle your head in front of the seat. You will be all right.
Yeah, everything's good. I got it on autopilot. See ya! That is literally what is going on right now. So please, everybody, tell your family, tell your friends. It's time to get educated. It's time to responsibly stack sats. It's time to live on dollars month to month, but to get them out of your bank account, to opt out of the system, embrace freedom, take responsibility, and then once you're in that position, you're going to sleep better at night. Life is going to be more enjoyable. A lot of the stuff that these normies are worrying about, like the yield curve, like you see me get passionate about it because this is what I do. But for the everyday person, who cares? And if they hear about these things and they're concerned, get Bitcoin. That's how you get protected.
And further, if they hear about this, their heads explode and they're like, I don't even know what you're talking about, and it's complicated for a reason. Now, CJ, I think as a Bitcoiner, one of the big things that we always kind of get hit on, like painted with, is this big brush that Bitcoiners are doomers. I know like Larry Lepard's been screaming from the rooftops about the big print, and you'll get, some snide Bitcoin remarks of like, you've been predicting this for 20 years, bro. Like, when is this going to happen? And so my question to you is, are we confirming our own bias, or is this exactly what's going on? And further, can they kick this can down the road? Is this an inevitable blow up? Like, what's the timeline here that you're expecting? Speculate a little bit. Your conservative bet here. What is the timeline that you're working with?
The most conservative I can be is it's happening right now, and it's called a soft default. So everybody talks about the doomers, but what they talk about is a hard default. A hard default is the recognition that the economy does not create enough tax revenue, and therefore we need to print money, and you know what? We're actually not going to print the money, and we're going to default on the debt, and everybody who owns treasuries is going to take a haircut to their principal. We're going to settle this debt for 50, 60 cents on the dollar. That will never happen. So I do agree with some people who say the doom and gloomers are coming out and saying, oh, this is going to happen, and we're going to hard default. No, why would they hard default? If we hard default, they lose control. This is about control. They want to keep control.
And trust in the institutions.
How do they keep control? How do they maintain the little bit of trust that they have left? And God knows only how they have that little bit of trust anyway. But how do they do that? Through the soft default process. And the ongoing soft default process is one of my favorite gifts of Jerome Powell. Just burr it up, because that's what they're doing. Even right now during quantitative tightening, they're burring. And when they raised interest rates, I mean, I called this on your show. When they raised interest rates, inflation was still going to go up because the deficit is going to increase. You're going to need to print more money to service the debt. And now they raised interest rates. People sold off Bitcoin, real estate, stocks. $7.5 trillion went into lending into the government and different cash equivalent products. If they lower interest, why are they waiting to lower interest rates? Because the second they truly lower interest rates, not just a little 25 basis point low, $7.5 trillion will rush back into assets like Bitcoin, gold, real estate, and price. I mean, you think we have an affordability crisis now? You think the real estate market is frozen now? Wait until they actually try to lower interest rates to unfreeze the market. Prices are going to, we're going to have COVID 2.0. It might even be COVID squared. How much did they print for COVID? 4 or 5 trillion?
I think it was 4. I think I saw it this morning. It was 4.5 trillion, I think.
4.5.
That's probably the conservative number here, but at least 4 trillion.
Okay. Well, we got 7.5 on the sidelines. That's almost double.
Yeah.
This is COVID squared. When they lower rates, when they panic and they finally make that decision, that money was going to rush back in. And I'm telling you, Bitcoin is going to parity with gold. I think the first stop is the price of a single family home, and I think that's when people start to, wait a second, I took out a 30-year mortgage. I promised to work the rest of my life to own my house. Now it's actually going to be harder to own one Bitcoin. So I think that's our first stop, single family home. And then after that, we go to gold parity at $1 million.
Okay. Amazing.
It's that
all right.
bad.
Yeah. So I was going to go somewhere, but I really want to touch on this with you real quick, because we had Peter Schiff on the show earlier today. He was here, we got him on the show, and he was going basically like, Bitcoin's cool, but gold is the real hedge, and anyone that knows anything holds gold. And we're like, yeah, cool story, bro, but like Bitcoin's better, it's going to go up more. And he's like, yeah, maybe, but like it could also go to 10K. It's a little riskier. So as we see, and as we kind of been following, yes, gold is going up, Bitcoin's rising. For the Peter Schiffs out there that are stuck in the Stone Ages around gold, do a quick take on gold, and then I really want to touch on stablecoins, because we've been talking, or rather hearing a lot of stablecoin regulation, stablecoin talk about, this will get us out of the debt in the United States. And the first time you talked about stablecoins with me, I was like, dude, you got to slow down a little bit. You're blowing my mind. You're going to have to come back and do this again. So start with gold, and then let's hit stable coins. And then, of course, we got to talk about what you're building with people's reserves.
Absolutely. So it's amazing. I had a 20-minute conversation with Peter the other night at the whale party. I tried to convince him of what I'm about to say right now, which is, Peter, look, we know gold is going up because they're diluting the dollar, right? So as they inflate and the purchasing power of the dollar goes down, the cost to rip the gold out of the ground goes up. Well, no gold producer, the many gold producers that Peter's invested in, unless he thinks they're going to sell the gold for a lower price than it's costing them to produce, it's probably not a good company to invest in then, huh? Because there's no profits. So of course they're going to ask for a price above the cost to rip it out of the ground. And gold has done and will continue to do as a natural money what it's best at, which is protecting your purchasing power, but not growing your purchasing power. So gold is that natural money, but Bitcoin is an engineered money. It takes the dynamics of gold and it engineers it through protocol and code, and that's the difficulty adjustment. the difficulty adjustment. If you want to know what the future of Bitcoin holds when it comes to price, look at hash rate. Because as hash rate goes up, difficulty goes up. And if there were ever a time where people were not willing to pay a price above the cost for Bitcoin, hash rate would shrink. So when hash rate shrinks, that tells you the marketplace itself is telling you the value proposition of Bitcoin is getting ahead of itself. But of course, in a world of lies, the value proposition of a truth ledger is infinity. So we have Bitcoin, this engineered money, where the difficulty adjustment pushes up the cost. The producers must ask for a price above the cost. That means when people vote with their money to buy Bitcoin, even at 106,000, they're saying, yeah, the value proposition of Bitcoin, I confirm that with my time and energy, with the value of my time and energy. And that's what Peter is missing. It's not just a natural function. We've taken that natural function, like you take the flame and you turn it into a light bulb. We take that natural and we engineer it. Well, we're taking the natural reality of price discovery dynamics with cost of production and voting with your money for value proposition, and we engineer it into the difficulty adjustment, and it drives value into the network. So I tried to explain that to him. I don't know, maybe we were a drink too deep, but I don't think the light bulb went off. It was a fun conversation.
Well, there might have been dead eyes already in there, so you know.
I mean, darn it, I thought I had a chance. But you know what? I feel good thing I didn't convince him, because then I would have had to sell everything.
Yes.
When Peter flips, I sell.
Yeah, when Peter flips, it's over. That is hyper-Bitcoinization. Okay, all right.
Never sell. Never sell.
Never sell. We are hodlers forever. One thing I want to plug before we talk about stablecoins is I remember we had a conversation, and I'm not going full TA here, but to see a visual representation of what you just talked about, you showed me a trading view indicator, the cost of production by Collateral investments. Find it on your trading view. I'm not saying trade off of it. I'm just saying you can visually see exactly what CJ just explained. Then rewind, watch it again, and make this click for you what he just talked about. It's, I think, one of the most, that was when you first told me, like, the first mind-blowing thing you said, and I'm like, oh my God, this interview is going to be insane. So again, it's cost of production by Collateral Investments, I believe it is.
Yes, and Bitcoin energy value.
Oh,
so
okay,
there's
we got a new one.
There's two indicators.
Okay.
Bitcoin energy value and cost of production. And then, of course, my Bitcoin fair value algorithm, which kind of creates a hybrid model out of both of them, putting CapEx and OpEx together.
Got it.
But I think energy value today is at 84,000, so we're at a slight premium to that. But then when you start talking about additional operational expenditures and you talk about the cost of production, I think the top end of that is like 104. So we're right at that level right now. But when you combine CapEx and OpEx, because look, the cost of production isn't just the energy cost, it isn't just the land, labor, and materials. What about the $100 million building you just had to build? All of that goes into the cost, right? It's a business model. Well, Bitcoin fair value today is at $321,000. There has never been a bull market ever that price has not ended above Bitcoin fair value to end the bull market.
Wait. Repeat that for the people.
Absolutely.
One more time.
Bitcoin fair value is at $321,000. There has never been a time where price hasn't traded above that value before we went into an elongated bear market trend. So I think this is just the beginning. Macro is confirming it. The mining metrics are confirming it. The indicators are confirming it. And if you don't believe me, go look up Charles' work. I look up to Charles. He's an OG.
Amazing. Charles is amazing.
I look up to him. I learned a lot from him.
Yeah.
And I built on top of his shoulders. So those three metrics are extremely valuable. And like you said, it's important to know, you don't trade off of that. You just look at it to get a reference about where we are, you know, especially if you're borrowing against your Bitcoin to understand the kind of risk with your LTV.
And we'll talk about that. We're going to hit on that. But I really want to hit on stablecoins real quick, because, of course, stablecoins is all the rage in DC right now. There's a lot of stablecoin regulations. We even had, you know, JD Vance in here talking about stablecoins. We're hearing the crypto czar talk about stablecoins. Like, Senator Lummis is trying to push a stablecoin bill. What is going on with the stablecoins? Why are they pushing so hard for the stablecoins? But also, will they ever be able to pay off the debt? Like they say, because they're buying, you know, treasuries for the stable coins, and like Tether, they're buying Bitcoin. What is going on with this stablecoin arena?
This is probably, I think, one of the most interesting conversations going on right now, and I think there's some big points that are being missed. I don't even know where to start because I have multiple points I want to make here. I think let's start with an original conversation I had with Byron Donalds. And of course, he sits on the Financial Services Committee, or he did. And when I talked to him at the Bitcoin Energy Summit a while back, I asked him, I said, hey, on the Financial Services Committee, I know you guys are, look, this is what he admitted. There's a lack of demand on treasuries, right? So that's the main narrative right now. Stablecoins create demand on treasuries. Why do you need demand on treasuries? Because the more demand, the lower the interest rate's going to go. Just another signal that they're losing control of the yield curve, and they need to figure out a way to create demand, and stablecoins are probably the most easiest way to create that demand. That's highly concerning.
I mean, Tether's the most profitable company by, personnel on the planet probably ever.
Yeah, absolutely. Well, it's a great business model.
Yes.
Well, I asked Byron, I said, hey, have you guys spoke about this on the Financial Services Committee? Have you considered this? If you pass this stablecoin bill and you allow people in the marketplace to choose between a bank deposit versus a stablecoin, have you thought about the consequences of that? Have you thought about the fact that when someone owns a stablecoin, it's backed 1-to-1? If someone has a bank deposit, you're lucky if it's backed by a penny. I mean, even in the best case scenario with the strongest balance sheets in the world, it's backed by 10 cents. So between a penny and 10 cents banking your back deposit. And by the way, this weekend's coming up. It's Sunday. Sorry, we're closed. Oh, and by the way, you're not allowed to buy that car unless you ask us permission, slave.
Yes.
So you're backed by a penny. You have to ask for permission. You don't have 24/7 access, and you can only take out small quantities before red flags get raised and they start asking you questions about what you're doing with your hard-earned money. Well, Byron, what happens when the marketplace gets to choose a stablecoin that's backed 1-to-1? You have access to it 24/7. You can move unlimited amounts without any questions whatsoever because it's based on a protocol instead of permission. What happens when all of those bank deposits go to stablecoins? And the answer he gave me, I'll never forget it. And his eyes, I'll never forget his eyes either. He's looking at me like,
oh shit.
He goes, CJ, I don't think you're going to like this answer. I don't think the people in the Financial Services Committee are smart enough to figure this out.
Damn.
So the people, they're so focused on, and you know what, I don't blame them. Let's make this clear. They have a tough job. They have a really tough job, and they're getting pulled 10,000 different directions, and their biggest problem is demand for treasuries, and they see a solution for demand for treasuries. But the second and third order effects are not really being thought of. So my opinion is, if this coin goes through, this is the Trojan horse. I always thought Bitcoin was going to bring down the banks.
Oh man, wait, before you go on, did you catch Safedine speech yesterday on Tether, or rather stablecoins, and how he was basically saying, he was pretty much saying like, look, like what you just said, like, I really don't think Tether, or rather, stable coins are going to save the dollar. I actually think it's going to bring on the demise of the dollar, because the Bitcoin reserves to these stable coins, if they keep stacking Bitcoin, at a certain point, that's going to be worth more with the Bitcoin price rising than the actual fiat reserves there. And that might be the slow transition straight into the Bitcoin standard. I think you just said the same thing.
Yeah, I missed that one, unfortunately, because I was
a clip on Twitter.
Around.
It's a short. It's like 7, maybe 12 minutes, and he pretty much said the exact same thing.
Amazing.
So hey, great minds think alike.
Well, that is a really great mind there. I don't think I stand up to that one, but I couldn't agree more. I really think stablecoins are the Trojan horse here that could really lead to and again, when I say collapse, I just mean the unlimited printing. Right? You're not going to know there's a problem. Just like the bank term funding program. Do you realize if there were no bank term funding program, every single bank would have collapsed? Every single bank, derivatives on top of derivatives on top of derivatives, it all would have collapsed. That's why they created the bank term funding program. But when you look back on that, 9 out of 10 people they've never even heard of the bank term funding program. And that's what it's going to be like. That's what I mean by soft default. It's print, 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 print. Your quality of life and your standard of living continues to go down. Stablecoins aren't going to reverse that. They're going to accelerate it. That's the concern.
Yeah, no, that was the biggest, I was sitting, I couldn't sleep this morning for some reason. I was up early, and I was like, all right, let me get on Twitter. I'm like, I forget what the title was, but it's safety, and it seemed like he was embracing stablecoins. I'm like, what's going on here? This can't be right. And I watched it, and one of my buddies, he's like the biggest stablecoin hater, and he's brainwashed me into that thinking. I sat there for a moment. I'm like, whoa, maybe stablecoins aren't, the enemy at the gate. Maybe it's the Trojan horse at the gate, and it's like, maybe this is what, Paolo says it himself all the time. It's like, we're Bitcoiners. We're here to transition into Bitcoin. And the politicians are like, this is going to continue the dollar dominance. Let's bring the Trojan horse through the door. Yeah. And now, literally, after this morning, I was like, oh, wow. I have to totally reevaluate what I've been thinking, because this makes perfect sense to me.
Yeah, it's happening. And, one thing that's amazing about this is in China, they've now launched a exchange where you can turn in the renminbi for the gold. So the oil that they buy from the Middle East, they can now take that fiat cash and turn it into gold. So we're seeing China align with gold, and the United States needs to align with Bitcoin. So I'm not sure that we could pass this over on the masses. Bitcoin is kind of one of those triggering things. So it's not only a Trojan horse to getting to the Bitcoin standard, it's also a Trojan horse in getting Bitcoin to the masses through the dollar, right? Because they're not just going to accept Bitcoin out of the blue. Most people are like, it's like Trump. It's like orange syndrome. Everything orange is bad. This banner is bad. This banner is racist.
I had stablecoin derangement syndrome until this morning, okay?
But at People's Reserve, we have a stablecoin as well. Why? Because the best way to spend your Bitcoin through the monetization and financialization of this asset class is not to spend your Bitcoin. Trust me. Don't spend 100 Bitcoin on your house and go broke. Yeah. That's a bad idea. You don't want to live in a $600,000 house that could... $10 million, Opti. $10 million house. I can't even get $1 million for it. So what would I have been better doing? Let's borrow some stable coins against my Bitcoin to buy my house. And then over time, I end up with my house and with my Bitcoin. Stable coins are actually the best way to spend your Bitcoin. So I'm with Paulo. I think that this is a part of the transition. It's a Trojan horse, and this is going to accelerate it. And we need this because we need USD, BTC versus China and gold. That's where we're going right now.
Interesting. Okay. Well, now I'm going to have to re-listen to this and unpack this. So before we go, though, CJ, let's talk about the People's Reserve. One of my favorite memes, and you literally beat this in everyone's head that listens to you, is this idea of Bitcoin as pristine collateral, and this is why you built the People's Reserve.
Absolutely. I mean, it is. You get the best of both worlds from gold and treasuries, right? So gold was a great collateral because it was hard. Over the life of the loan, you couldn't have the collateral be diluted because there's a cost to pulling the gold out of the ground. There's a proof of work. So that protects the value of the collateral. But it would cost sometimes more to settle with that gold by settling it around the world, security, traveling around the world to settle the gold than it would borrowing against it. It didn't make sense as a collateral. So going to the T+1, 2, and 3 settlement that you saw in the cash equivalents of treasuries really became popularized, especially as the system became more centralized and interconnected through the banking network. And now you could settle across the world for really cheap over just a couple of days. The problem is that the value of gold was its hardness, and the cash equivalents just completely eliminated the hardness. And now we got the Burr problem. So the supply is just going up ad infinitum. So it doesn't matter that you can settle it cheaply and easily. But when you have Bitcoin, you get the best of both worlds. You get an upgrade from the hardness of gold to absolute digital scarcity. Then you get an upgrade from T+3, or what that means, a fancy way of saying it takes around 2 to 3 days to settle a cash equivalent collateral transaction, to now 10-minute block times. And you get transaction finality with complete security.
Yes.
So that's why Bitcoin's the most pristine form of collateral. You get the best of gold, you get the best of treasury. It's the natural evolution from two solutions that just didn't cut it into one solution that works perfectly. And when you go into a bank and you promise to pay them back, that's more risk for the lender versus you coming to a lender and saying, here's my pristine collateral. You shouldn't care about my job. You shouldn't care about my debt to income ratios. You shouldn't care about my cash flow. I brought money to the table and money talks. And this is the most pristine form of money, the most pristine form of collateral there is. Shut up and give me my loan.
Hit the horn, top right, top left one.
Now listen.
Hit the other one, the one next to it. Let's go. Okay, love it. Okay, now, You explained pristine collateral, which is the perfect segue to wrap this up and talk about the People's Reserve. I know you've been telling me You've been jumping through every hurdle known to man to get this going. And now after this conversation, I really wonder why you're going through all these problems. It's almost like they don't want this to happen, even though they can't stop it. So plug People's Reserve and then let the people know where they can find you and basically just come along on the journey with you.
Absolutely. So look, these people control us with debt. They call it debt slavery. But something happens. You can take that weapon they use against you and turn it against them with pristine collateral. So when you have debt in a fiat system, you're the slave. But when you have pristine collateral borrowed against, debt borrowed against that pristine collateral, you are actually in charge because you're empowered by Bitcoin yield. Bitcoin yield is not lending your Bitcoin to a counterparty and taking counterparty risk and getting paid for that risk. Bitcoin yield is taking out a fiat-denominated loan against your Bitcoin, and then over time, because of the compounding annual growth rate of Bitcoin, the burden of that fiat-denominated debt shrinks. It shrinks. So now the weapon that they use to control you, that is your liability, now becomes your asset. And at People's Reserve, that's why we're here. We want to help you take control of their weapon and wield it against them so that you can be empowered by your responsible saving of Bitcoin. And we do that through all our Bitcoin financial products, like our Bitcoin powered mortgages and our Bitcoin bonds. So that's coming up this summer. We couldn't be more excited. We put our blood, sweat, and tears into it. And unlike other lenders in this space, not going to name any names, but we are not here to extract value. We're here to deliver value. We're Bitcoin maxis who built for Bitcoin maxis, and we want to make sure that you can increase your quality of life and standard of living because of your responsible saving of Bitcoin. We want to make sure you can get your dream home without giving up the most important asset in this world, especially where we are right now. We're about to go up the S-curve of adoption. There's about to be a huge transfer of wealth. You do not sell your Bitcoin right now. You simply borrow some stablecoins against it. Once we make that big transition and we're at the top of the S-curve, then you can start spending your Bitcoin. But until then, use tools and products like ours to make sure that you're protecting your future generations and being responsible savers with all that time and value that they want to extract from you. Turn that weapon on them and become the master of your life. Choose responsibility, choose freedom, and be empowered by Bitcoin.
Let's go. Now that is called bars. I'm here with CJ, one of my favorite Bitcoiners. And now if you digested this whole conversation, and maybe this is your second or third time, you understand why he's one of my favorites. Absolutely been spot on a lot of his predictions, and I think you're probably going to be right on this one as well, CJ.
Maybe. Well, for everybody out there who hasn't done it yet, go to peoplesreserve.com, sign up for our newsletter. We're not just going to teach you about Bitcoin, we're going to teach you how to use your Bitcoin and how to be empowered by it. Of course, follow us on Twitter, follow us on X. We're going to do everything we can to make sure that you have control of your most important asset, multi-sig, no rehypothecation, mitigated liquidation risk. The future of finance is now, and it starts with People's Reserve.
There you go. You heard it here, guys. We are wrapping up Bitcoin 2025 in Las Vegas, and I think Michael Saylor just came on the main stage. The floor here, the expo hall is cleared out. This is the best save for last with CJ. Thank you so much for coming on, man.
I love you, brother.
I hope you guys enjoyed that. Rewind this 2 or 3 times. Maybe put it on, 0.75 or whatever you got to do. Unpack the sauce that CJ just dropped for you guys. I'm Opti, and we'll catch you next time.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to Ledn.io today.